What's going on, everybody? So part 4 in how we can trade in any market condition, whether that be a bull market, a bear market, a choppy market. Keep in mind, choppy markets profits are a little bit more smaller. However, you can use these strategies playing long, playing short. It does not matter. The only thing that matters is your self-discipline when it comes to trading. How self-disciplined are you to click the sell button to sell when a position moves against you? And how quick are you to click the sell button when the move is in your favor and you're locking in profits? I want to talk a little bit on how we can short using the 20 period moving average. Okay. I'm going to give you a few methods using the 20 period moving average. Guys, I use the 20 period moving average about 60 to 70% of my time, and I only realistically use about 2 to 3 setups day in and day out. I'm a day trader and a scalper. I do some overnight swings on the bigger time frames. However, the time frame that we're using right now is the 5-minute time frame. On this 5-minute time frame, we're going to be looking at DraftKings. I just went over, 3 ways on how we can trade DraftKings to the long side based on what the chart action gave us today. Today is the 21st of September. So we talked about the reclaim, we talked about the elephant bar, and we talked about the color change. Okay. I also mentioned about this top tail here, losing momentum on the upward move. So let's talk about how we can short a position into the 20 period moving average and below the 20 period moving average. Okay. So in this video, we are going to be talking about shorting into the 20 period moving average. We are going to be talking about the elephant bar, the bear elephant bar here. So if we are watching this play, let's say, for example, we took none of the long positions that I went over in the previous 3 videos. Let's say that we started watching this stock here, or let's say even we took one play here and we continue to watch this stock here. Now we see, this big tail coming in. We notice that we're starting to lose momentum. We notice that the indexes are also losing momentum, and they're starting to work against us. We know that when the indexes like the SPY and the triple Qs start to fade, some stocks start to fade with them. Okay. So let's just take this for example here. We know, if I pull up my tool here, we know that we want to enter plays near the 20 period moving average. Okay. We know that when we are away from the 20 period moving average, that normally we are looking to take profits or look for some sort of reversal. Okay. Now this is taken from a scalper's point of view. Okay. We're not talking about holding stocks for a week. We're not talking about investing in stocks for the next 6 months. We're talking about taking cash flow moves. Okay. We're talking about going in with size. We're talking about going in with confidence, and we're talking about being disciplined enough to know your entries and exits, whether that be getting stopped out or whether that be taking profits. So in this particular situation, we know that we got a move here. We got 1 push, 2 push, 3 pushes higher. Okay. We know that we got this big tail coming in here. This is telling us that we're starting to lose momentum here. Okay. We notice that we're getting 1 consolidation candle, 2 consolidation candles. At this point in time, we could be looking to set up some kind of bull flag here, some kind of flag pattern where we're going to bust out. But we know that we need to take out this candle, this tail here. We know that we need to take out this tail before we get any more bullish. Okay. If we don't take out this tail, we know that there is no play to the long side. We are extremely far away from the 20 period moving average on the 5-minute time frame. Okay. We're extremely far away. And we know that we have to take out this tail here before we get long. So this looks like we're setting up to break out. This looks like we're setting up to break out. This opening candle looks like we're set up to break out. However, it doesn't. 3 rejections here. We know that now we can start looking to the downside. Short term, 5-minute time frame. We're looking for 1, 2, 3 candles. Okay. We're looking for 5 minutes, 10 minutes, 15 minutes. If you get lucky enough, in the trade for 25, 30, 40 minutes, that means the trade is going extremely in your favor and all you are doing is riding those profits. But if we're looking to scalp here, we know that we have this tail. We know that we had a little bit of consolidation. We know that we got rejected 3 times. This is a bear elephant bar, okay? So we talked about elephant bars on the bull side. We're going to talk about elephant bars on the bear side. We want to enter into an elephant bar near the close of that 5-minute candle. Let's say 4 minutes, 4 minutes and 15 seconds, 4 minutes and 40 seconds. We want to put our money into that elephant bar near the close. We know that when we do that, we are looking for a push lower and we're looking to take profits 1, 2, 3 pushes away. 3 pushes down. 4 is great. 5 is better. However, 2 to 3 is generally the sweet spot. We also know that we have a rising 20-period moving average here. So in this area here, we could get a bounce back higher. Okay. In this case, we did not, but we could. So we notice here, we have a top here on this tail. We see here that we started to sell, get some selling pressure, and we get this elephant bar candle 1 minute, 2 minutes, 3 minutes. We take out 1, 2 previous candles. This is telling us this is a bear elephant bar. We want to put our money into the close of that elephant bar. We are looking for 1 to 3 pushes lower. What is our absolute protection? Our absolute stop, guys. You guys should know this from the previous videos of going long. Our stop is our candle's high price. If this is our entry candle, okay, that's an E for entry. If this is our entry candle, we're using the high price when we're going short as our stop. We see here we had rejection 1, 2 times. Let's say we get pushed down here. We come all the way down. It's 4.5 minutes. You put your money in here and this candle comes up, starts to push higher. It's okay. You want to continue to ride this trade. You want to continue to ride this trade. And we get a push through and we close, say here. That is where you're going to stop out. That is the cost of doing business, guys. In trading, you are going to lose just as many times as you win. However, when we lose, we're only going to lose 1 bar. And when we win, we are going to win 1, 2, 3, sometimes 4 bars. So you can see how that starts to work in your favor. Okay. Recap. We know we have a topping tail here, losing momentum. We know we tried to bust out higher 3 times. We know that this is an elephant bar here. We want to put our money in the close of that elephant bar. This is our protection, meaning our stop loss. We are looking for 1 push down, 2 push down, 3 push down, 4 push down. I want to be taking profits here or here or here, definitely here, okay? Definitely here. If we get here, you need to start closing out this position because here we came down and we tested the 20-period moving average. We could have gotten this candle here. This candle could have bounced higher, back tested, broke through, and now start to push higher, okay? I hope that makes sense. This is how we play a reversal off of a move that we know 30 minutes. We put in a move from 8:30 in the morning to about 9:15. This is a 45-minute move here. We know that we had 3 plays here, okay, with 2 to 3 pushes higher. We see that we had rejection here. We see that we have an elephant bar here. We took out 2 previous candles. We're going to put our money in here. This is our stop loss up here. And we're looking for 1 push down, okay? 2 push down, okay? 3 push down, beautiful. 4 push down, we definitely need to be taking profits. I'm going to preach to you guys to take profits 2 to 3 pushes down. In this case, we got 4 pushes down. Do not get greedy, guys. This is not your money. Okay? That is not your money. In this particular play, okay, that's our confirmation of our elephant bar. This is our entry. This is our stop. All of this is our money. That's your money. Okay. This is your money. Okay. You worked for this. You earned this 5, 10, 15, 20, 25 minutes. This is not yours. Leave that for somebody else. Okay. That is not your money. Last thing we want is to get down here, get greedy, get a bounce, and come back this way. Last thing we want to do. Okay. So if we look at it, if we entered in the stock price at around $54.74, that first push is taking us down to $54.28. That's around 40 to 50 cents. Your second push is taking you to $54.18. And that last third push is taking you to $53.98. From $54.73 to $53.99, you are looking at about a 60 to 80 cent move in your favor. Guys, you enter into this play with 100 shares, you immediately made 60 to 90 points, $60 to $90 in 5, 10, 15, 20, 25 minutes. If you entered into this play with 1,000 shares, you essentially made 600 to 800 points in 25 minutes. Minimum wage here in California where I'm at is currently $14.50. You can make a great living doing this, guys, but you have to have discipline. You have to have a trading plan, and you have to respect your trading plan. This is your stop. If this move fails, okay, and this bar closes here, we have to stop out. We have to stop out. Okay. That's the cost of doing business. Look for another setup, but we have to stop out. Rejection and protection. We know that we need to clear this to even get long. We put our money here. We look for 1 push, 2 push, 3 push, 4 push. I recommend taking profits on the 2nd to 3rd push. However, this gave us a 4th push. You could have easily played this here. If this would have closed over this candle here, you would have stopped out here on the 3rd push. This is where you need to take your money. 60 to 90 cents in this move, guys, in 5, 10, 15, 20 minutes. This is your money, guys. That is your money. This is somebody else's money. Okay? Don't get greedy. Respect the charts. Respect your protection. Understand where the reversal would come, or the continuation of this move. Excuse me. The continuation of this move would be over this price. I hope that makes sense, guys. And I'm going to make another video showing you a second entry that we could have taken short on this play.